Good morning, everyone. Good morning, Dave.
Microphone.
Everybody get their speakers and mics set up.
Yes, can you hear me?
I gotcha.
Okay, good. I leave that mic plugged in, and it messes me up here on Zoom.
Good morning, Asham. Good morning, Nurag.
Good morning, guys. Michael, good morning. Keith, good morning. Very, very interesting.
Hey, John. Good morning.
Wow.
Look at what you brought out with the nice little teaser video, Dave.
Yeah, people are coming out, huh?
Coming out of the woodwork.
Andre, good morning. Man, what's the news today? The Dow's up 300 points?
Yeah, good question. I was actually just getting my stuff all fired up. I was like, what's going on here?
Yeah, I mean, of course, I don't really look at it because I'm just looking at the spread, but I just happened to glance over there. So,
Oh, I keep watching for it because I'm reading those market timer updates. And I'm like, if we take another dive, I want to be on top of this.
yeah, no, yeah. This is volatility type of. This is big though. This is news. Oh, okay. Dow is up, according to CNBC, Dow is up 350 points after Trump says he'll meet with President Xi. When is the market going to stop moving based on this trade war? I mean, they just use it as an excuse, I think, to move the market around. But maybe Trump is doing this. Maybe Trump is using these meetings, and he just announces it when he wants the market to go up, or trade, talks, are called off, and he wants the market to go down.
Yeah, did you see the headline he made? I think it was over the weekend. If I don't get reelected, the stock market's going to crash.
Yeah, exactly. I'll share my screen here.
All right, cool.
We're watching I'm watching the new scripts, and on a shorter time frame here, 10 minutes, and then of course my 4 hour is my favorite. 4 hours, I love the 4 hour. But somebody asked in the chat room if you can use it on a shorter time frame. I think it was Asham, and I said, yeah, absolutely. You can use it on any time frame that you want. Very interesting. We'll get into that in just a little bit. Let me see if I can get the chat back, though. When I share my screen, I don't see the chat anymore.
Yeah, you have to hit the bar up on the top or the bottom when you're full screen. Then you can open the separate window up. Yeah, James, I saw Facebook talking about crypto, too. I think I saw some news about that last week. Facebook's own cryptocurrency.
Yeah, I tweeted about that this morning. I read the white paper for the Libra coin that Facebook is coming out with. Basically, it's here's the really interesting thing about it is they're charging $10 million to each of the companies that want to run a node, which is basically just a server that keeps the DLT, the ledger, and so first of all, why it's an open source software, but why would they charge $10 million to these companies to run a server? So there's something in it for them. Obviously, the companies that are going to invest in this are looking for a return on that $10 million. They're not just going to do it altruistically, I think. Second thing is, it's not really a cryptocurrency. It's a stable coin. It is a cryptocurrency, but in the fact that it uses a token, but it's pegged to a basket of currencies and debt instruments. It's not in competition with Bitcoin or XRP or Ethereum or Cardano or any of the other cryptocurrencies. It's more along the lines of a Tether kind of thing. They're going to keep the coin at a very stable price, but they want to use it for transactions. They're quite a ways away actually from launching this thing. They have governance issues. They made a comment that in the white paper that storage is going to be a problem because of the way the token is issued. They also made some comments about the fact that they burn tokens and they create them at the same time based on supply and demand. It's a little bit strange at this point. Jim Cramer was talking about it on CNBC, and he said Facebook is the new JP Morgan. I thought that was hilarious.
That's a good one.
Yeah, so it's not competition with XRP. And in case you guys didn't hear, also Ripple came out with some fantastic news. They bought a 6 to 7% currently, possibly up to 10% of MoneyGram.
Wow.
Yeah, MoneyGram is the second largest money transmitter in the world, doing $600 billion a year. And they are going to use XRP in their transmission of funds through MoneyGram.
Interesting.
Yeah.
They're headquartered right in my backyard up here. I know those guys.
MoneyGram?
Yeah, MoneyGram is.
Oh, wow. Yeah, I thought about it, but I didn't really, because it was a rumor floating around on Twitter like a week or two ago about Ripple actually buying MoneyGram, the whole company, but it turns out that they're just buying like up to 10%. So in other words, they made a deal that MoneyGram can basically draw on a $50 million fund or a $100 million fund, I think, and 50 million was already drawn down, and they have the rights to draw down another 50 million over the next 2 years. And so they will own up to 10% of MoneyGram. MoneyGram stock was at $1.45 yesterday. Now I think it's at like $3.50.
Interesting.
Yeah, very interesting. But in any case, it's not. This new Libra coin is definitely not competition for XRP. It's not a competition for Bitcoin or most of the major cryptocurrencies at all. It's basically just another. It's a fiat coin, basically. It's got counterparty risk. I'm not sure how they're going to stabilize the coin value. See, Tether has a big issue. Sorry, I'm going off on a tangent here, but Tether has a big issue because they have to stabilize the price of the Tether coin based on the backed assets. Now, it came out that they said they were 100% fully backed. People said, well, let's see, let's see what the results of the audit are, because people didn't believe that they were 100% backed by fiat currency. And so a audit team went in from one of the big accounting firms, I forgot which one, and they wouldn't give them access to their computer systems. So I'm not sure how far the audit actually got, but the auditors walked off the job and everybody was freaking out. And so Tether was supposed to be pegged at $1 USD, and it dropped to like 85 cents or something, which is not good. And then they came out and they said, well, we've got 90% backed by fiat, but it's not all fiat. It's like some gold and it's some corporate debt. And so it's like a mixture of different things. And that didn't set well with the community. It's interesting that Facebook now wants to do a stable coin, which is pegged to currencies. I'm not sure how this is going to play out, but it's going to be interesting. Anyway, all right, guys. Let us take a look at these new scripts. Really fantastic stuff here. Last night in the chat room, I put a screenshot of the trade I took last night on the the MYM M and Q, so the micros. And I took a short position last night. Got out this morning right around here only because I said, well, look, I want to take some profits. And then I ended up going short very, very late here on the ESRTY. I think let me get some questions from you guys, but basically, as I mentioned in the video, hopefully everybody had a chance to watch the videos, but the basic code of what we worked on in order to create these new scripts is based off of the binary trend for the most part, with some twists. So it's not 100%. It's very, very different in some ways. But what we did was we said, okay, look, the binary trend is really, the bell curve is, of course, how we determine the negative or positive trend of the spread. And so when it's turning positive, especially when it's going up the bell curve, then it's a positive spread. But what we see are these strands of positivity, this positive, starting to build like from this point, and it's starting to weave itself through the binary trend. And then when the binary trend becomes solidly positive, basically almost the trend itself becomes very, very positive. And so you see there's very little, there's a little bit of a negative trend in here, but it's mostly positive. And when it's mostly positive, then most of the movements in the spread are going to be to the upside rather than to the downside. You're gonna have pockets, of course, of down moves, but for the most part, it's an up move on the bell curve. So we try to combine a little bit of the bell curve, a little bit of the binary trend, but it's mostly the binary trend. And instead of taking 6 columns across, we actually did 12, so that we extended the binary trend, and then we could find out, like here, we see some positive trends and the spread start to develop, what that looks like in the script, so that we can kind of determine, hey, is this going from a negative trend to a positive trend? And so the way that I coded this was that these blocks here is basically a representation of the binary trend on the spreadsheet. So when it's all positive, it's going to be above the 0 line. When it's all mostly negative, it's going to be below the 0 line. And the thread that you see running through here is that negative trend developing until it reaches at some point, and it depends on different time frames that you're on. So this is it's going to be different for each time frame. But typically it's going to be either -50 or +50. That's kind of like the limit over a 4-hour period for the trend. But the one thing that makes this different than the other oscillators that we've been using, including the bell curve oscillator and the 5th column levels, is that this is more stable. So as you notice, even on a 10-minute chart, this doesn't fluctuate wildly like it does on the 5th column level or bell curve oscillators alone. There's a relatively stable trend that can be identified. And that's what makes it much more effective, I think, in determining the shorter time frames and also the swing trades on the 4-hour. You can see that it transitioned from a positive to a negative stance immediately. So these threads that you see, positive, negative, mostly negative binary trend, and then you see a little bit of a positive thread running through here, and then it turns all positive, is the same thing that you're seeing here. There's a couple of different measurements, a couple of metrics that are really, really kind of important. Number one is the dominance. The dominance just means for whatever pair that you have up here, we've got YM and Q. Now, I could have put the MYM, MNQ up here, but because they're so new, they don't have any history to them. They don't go back far enough to be able to get the data that we need. So, but the YM and Q, the mini contracts, are close enough to the YM and Q that in price, that it doesn't affect the trade. It's just that we need more data because these are only, when did they launch? In June something, right?
May 1st, right around there.
Yeah, I think it was maybe the middle of May or May 1st. So you're talking about maybe 6 weeks of data. That's it. So there's not enough data. So YMNQ is the one that we're going to be using. For now, until maybe we get a year's worth of data out of MYM and MNQ. And so yes. Now let's see. Andre has a question. Does it replace IntraTrader? No. This is just these new scripts are just for the volatility arbitrage. So if you're using IntraTrader, it's based, the upper study here, this what we call the ARB signals, is based on the IntraTrader basic code with bull and bear sums. However, it is modified to be used just for the volatility arbitrage spread. So the IntraTrader script is, you still use it if you're just trading single instruments.
So underlying, think about it, Andre, is these are taken like Dave was saying, fifth column, those type of things, where it was dedicated to the Vol-Arb strategy, where we're always trading both instruments at the same time. And then IntraTrader is, you can put that on, your indices. That's the entire market for the Dow, the NASDAQ, and then you're trading probably the YM contracts or the MYM contracts, which wherever you are at in your trading, you can put those on those both charts. So there are different strategies. Two of those are the main ones that we do, right? The main one is the Vol-Arb. And then after we're out of our Vol-Arb, if we want to do continue more trading that day, looking for opportunities, that's where we're leaning on the IntraTrader script to identify opportunities.
All right.
If that helps.
Yep, he says all clear. Okay, good.
Perfect.
Isham, yes, I don't see any trend signals on the 10-minute chart. Oh, well, there are lots of them. In fact, here there's a huge cluster of down signals on the chart. They're just not going to be on every single movement. But basically what it's, as I mentioned in the video, the signals are not, hey, take this signal and go short. These are trend signals. So what they're doing is they're telling you, hey, this is a down trend here. A downtrend is developing. And as you get clusters of these, you say, okay, yeah, here it's telling me, hey, this is a downtrend here. Looks like we're going into another downtrend. So when you see clusters of the signals, that indicates that there's more momentum building for a down move. So they're there. They just may not be as frequent, especially in the overnight session, because the overnight session is relatively flat most of the time. So you're not going to see them much. You'll see them more during the daytime. But they're not going to be always there. They're only going to really kind of pop up when they see signs that, hey, this, the downtrend is not over in this case. It's just like saying, they're going to be popping up as the market is moving up and down, saying, hey, the trend is still down. That's all. It's a trend identification. Okay, so this is the shorter time frame, and you can do, so the most important thing, so dominance is kind of an important metric, because what it does is it measures which of the instruments is more dominant than the other. If it's red, it means that the NQ is more dominant than, and it's negative, it's more dominant than the YM. When it's green, it means the YM is more dominant than the NQ. Now, the slope is also very important. So, for example, we're starting to see a little bit of a turn up here. You did see a little green arrow kind of sticking up there just to kind of give you an idea. It hasn't formed yet, but it's kind of saying, hey, looks like we may be seeing the end of the trend here on the downside. But what we're looking at is the dominance. Now it's minus 6.5. When it starts to move higher towards the 0 line, if it's minus 6.3, minus 6.2, minus 5.9, as that continues to move higher, you're going to see the trend move higher as well. So you want to keep an eye on the dominance. And what it means is when it starts to go up towards the 0 line, because it's negative right now, it means that the NQ is starting to lose its dominance over YM, and YM is starting to become more dominant. So you want to kind of look at that trend. The crossover is basically what it does. It's this line here. It's the blue. It's a blue shaded area in the it's the histogram on the chart. And what that is telling you is that is just like filling out this binary trend. When a new trend starts, it always starts like in the first column, and then it goes to the second column, third column, fourth column, fifth column, as you know, and it fills out across the binary trend until it's completely full, like you see here. So when it gets to a certain level, basically it's the same thing. It's filling out all of the columns, and we've extended it out to about 12 cells. So in other words, it's in terms of the time frame that you're on, it can go up to minus 20, it can go up to minus 30. But the important thing to keep an eye on is the trend of the crossover as well. So as it continues to go lower, that means the trend is still lower. And so it kind of leads the market. And as long as it continues to go lower, you'll see the trend go lower. When it starts to move a little bit higher here, you see it starting to move higher here as well. And then when it starts to move lower again, it's just like this column being filled out, from across the entire column. We're starting to get, so we got this negative thread that started, and it's filled out now to all of the columns. Okay, then we have the bull and bear sum, which is very, very similar to the bull and bear sum that we use in the intratrader script. So it's starting to turn now. It's kind of like even. It's like almost like you got a little bit of bullishness coming into the market, and now you're 3-2. So there's somewhat of a positive bias coming in, and that flips around depending on where we are in the spread. But that's an important thing. See, now it just flipped to 5-0. So it's kind of like a signal saying, hey, just pay attention to your position because it is becoming a little bit more bullish. And that's really all that's saying. So dominance is very important. You want to see, what the, and that's what this red line is. So the dominance is represented by the line, the thread running through the binary trend. And so as that, gets stronger, it's going to go higher. The momentum is simply the difference between the dominance and the X over, so the crossover. So as that spread widens, the chances are it's going to snap back. And so you want to watch the momentum as well. If that continues to move up towards the 0 line, then you're going to start to see more of a positive trend coming. Now, on a 10-minute time frame, it's a little bit harder to determine, I think, than on a 4-hour, because on a 4-hour, you can see, like here, this is like 50 is drawn in on the 4-hour. 50 level. When it reaches the 50 level, that is a pretty good sign that we have stretched as far as we can go for the dominance in that pair. So in this case, it was, this is the ESRTY. So typically when you have it stretched out to that 50 level on the 4-hour chart, then you're looking at an extension of the ES probably at its max. That's why the 50 level is drawn in there. And at that point, you want to either exit a long position or you want to possibly even take a short position. So that's kind of, you see that mostly on the 4-hour chart, not so much on the shorter time frames. The other thing that, besides the bull and bear sum, which gives you an idea, really, where things might start to turn. You've got the dominance, which means that which of these instruments is more dominant than the other. If YM starts to gain in dominance, you're going to see it go up, and if the NQ is more dominant, you're going to see the spread decline, which is exactly what we want to know. We want to know which one is trending, and is, it's almost the same thing as looking at the percentage changes in a way. Instead of taking these percentage changes like I used to do when I first started this particular the volatility arbitrage spread, I said, okay, I'm calculating the difference of these percentage changes in my head. But what this will do is will tell you, hey, this is more dominant than the other. I don't have to do that calculation. This is exactly what's going on. And you've got, the NQ declining, and the, YM is not as strong as the NQ in this case. All right, finally, before I run out of breath, I think I'm going to take a sip of water. And then we'll get into the ARB volume. Let's see, Asham has a question.
Don't think there was a new one.
Andre has a question. So for an overnight trade with this, can you set a trailing stop? Only if your broker. Yeah. The problem with trailing stops with the spread, I'll let you talk about that, Dan. I know you know that.
Yeah, the trick with the spread is you can't set a trailing stop for it because we never know which side is going to be the winner or the loser. Sometimes both sides are winners. So we're looking at the spread, right? So if the spread's going down, that just means, so if we take YMNQ and we're long the spread, so we're long YM and we're short NQ, right? So we either make money when YM goes up more than NQ, or NQ goes down more than YM. So you can't set a stop on either side because we don't know which side is going to be the winner. And that technically can and has and will fluctuate even when you're in a trade, especially if you're in a short-term trade. So it's kind of rare, but it is possible. So you can't set a trailing stop on it, because if you set a stop on one side and then you hit it, then they both move the other way, then you get like a double whammy. So you never know who the winner is, which is why we can't do a trailing stop on those guys or on a spread. Does that make sense, Andre? I know we've talked about that a couple times, but just to make sure you got her.
Yep, you said that just right. Exactly right. Yeah. Because they both could be going up, and yeah, then if you set stops on those, then you could probably get out of the winning one faster than the losing one. You can't set stops on these spreads.
Yeah, because if you don't, the longer you let them go, like if you paper trade this and watch it when you're learning it, and it's obviously not real money, if you leave these on for days, you're going to have one that's like $1,000 winner and the other one's a $1,200 loser. So if you set a stop, say, hey, I only want to lose 200 on YM, well, you're making 400 on NQ or vice versa. So the actual value doesn't matter as much anymore. It's just the difference between the two. So you can be in a trade, if you let this go for a long term, you could be up $5,000 on one and down $4,000 on the other.
Right, exactly. You don't know which side you're going to make your money on. Isham says, what is the limit switch over from bear to bull and vice versa on from the signals? I think in the video yesterday, these are actually like 100 or something. The bull and bear sum were like 100, but that was a setting that was fixed. So now they're basically smaller numbers that you can actually measure and see and use. I think there's kind of like a switch that will trigger the bull or bear sum based on other parameters. And as soon as that triggers, it's like the trigger was set at 100. So we reset that. So with the final version, the scripts, they're stable now. It's not 100. On this side, on the crossover, the shorter time frames, obviously, the binary trend is not going to move as much as it does on the larger time frames, on the 4 hours. So on the crossover, probably, I mean, you have to kind of look at the history a little bit, but it's going to be right around 20, I think. If you're using a shorter time frame, the number of actual binary trend cells that are going to be used are going to be much smaller because they don't have time to develop, because it's a 10-minute chart. So anything around 10 or 20, it looks like, is going to be kind of the limits. Here's one that went down to 13. We're kind of at 13 right now, at least on the YM and Q. So you have to kind of use a history as your guide when it comes to the crossover. And like I said, like on the larger time frames, it's going to have more time to develop, so it could really go up to that 50 or 100 level. And at that point, you want to start looking for the other side of the trade. So let me go out to a 4-hour chart here. And you can see here's that 50 level. So it's almost the same thing as we've seen before. The difference between, there's a number of differences. Actually, there's quite a bit of difference between this and the bell curve, the 5th column oscillators that we've been using previously, in that there's a clearer demarcation between negative and positive trends. And also, there also is the thread running through it, so you can see when the negative, when the positive thread is starting to run through the binary trend and turning from, you know, this negative, from the positive binary trend to the negative binary trend. And so that thread is running through there saying, hey, pay attention to this because we're probably going into a positive trend here because we've hit the limit. We've hit an extreme limit down here of, you know, we filled out the entire binary trend here, and we're going to go from negative to positive now. And so as soon as that starts to trade up, you want to start to take a look for the signals. Like I said, these are really basically trend alerts saying, hey, there's a possibility we could be going up now, rather than actual trade signals that you would take to enter a trade. These are trend signals. That's the big difference there. All right, so see, on a larger time frame, you can see very, very clearly that this is heading in a negative direction. And even though we've got the spread moving higher, we're continuing to trend negative. And as soon as it crosses below the 0 line, it turns red. And we still have our signal saying, hey, the trend is down, keep the downtrend, keep, you know, whatever position you're going to enter. You want to be on the right side of the trade, and that's what it's telling. This is going lower. That means that we're going to start filling out the negative side of the binary trend, and we're going to be moving lower. Okay, let's go to the R volume. The R volume is something that is not based on any of the other scripts. It's not the binary trend. It's not 5th column levels. It is purely based off of the price action of the spread. And so because there is no way, I mean, you can put volume in these, I believe. I think I tried putting volume in it one time, but it's very, very weird. Because you're subtracting the YM and NQ, so you're basically, if you put volume on these charts, you're subtracting the YM and the NQ volume, and it's not really helpful as far as trading goes. So I basically wrote the code from scratch to substitute what we would typically use as volume indicators for the spread, for the volatility arbitrage spread. And so it works. I mean, if you do traditional technical analysis, especially like back in the 80s and 90s, maybe early 90s, after the 90s, 99 to 2000, after the tech boom and all that kind of stuff, there was so much computerized trading and high frequency trading going on. The volume figures didn't really help you when it came to your trades to determine, there's a lot, some of the older books on technical analysis really emphasized volume and the trend. So if you had an uptrend and volume continued to go higher as the trend was going higher, that's a positive indication that the trend would continue until you get to a point where it's like capitulation volume. So in other words, everybody's piling into the trade as the stock goes higher, and at some point, that's the end of the trend. And also increasing volume as the market continued to go higher was an important indication. Also pullbacks. If you had a pullback in an uptrend, you want to see lower and lower volume because it means that people are not selling into the downtrend. It's just a normal pullback where people are starting to sell a little bit, but it's very light. If there's light volume on a downtrend, it's a pretty good indication that the market's going to continue to go higher. As volume starts to pick up again, the market will go higher. So if you don't have that kind of training in volume price action, I could recommend a good book. What's a good book? Hold on a second, I'll grab one.
While he's grabbing that, Ashama can cover. Ashama asks, how would you use the new scripts for the open and short term? These are more for the swing trade setups. These are less for short term. At least I haven't tested them personally yet. I just got my hands on them very recently, and Dave's just getting them tuned up and tweaked out. So I don't believe he's tested on the 1 in the 5 minutes that we're doing with the other indicators. So these are geared more for swing trading and ins and outs. But I will definitely look at it and see what the indicators do and show on the short terms, and we'll definitely report back. And once they're released, you'll be able to see it as well.
Okay, the one really, really good book on using price and volume is called it's from Tom O'Brien. I'm not sure if it's available anymore, but I'll type it into the.
And just to give you a quick blurb, while you were grabbing your sweet book, I let Sean know that he was asking about short-term trading with the new ones, and that these are more geared for the swing trade setup and not the 1 in the 5 minutes like we're doing yet. Not that we can't test and look at it, see what it gives us, but these are built for swing trades.
Exactly. I mean, you can use them obviously for entering and exiting positions on a shorter time frame, because it'll kind of give you an idea of entry and exits. But the spreadsheet is still the most important tool that we have. Also, if you're using full contracts, if you're using the YM and NQ, you definitely have to stick with the atomic entries in the spreadsheet. I mean, that's critical. These new scripts are primarily for the swing trader. So you want to take positions over, overnight, 1 or 2 days, a little bit longer term.
And that's the nice thing about the MYM and MNQ, all the new micros, is even our traders that can't be in front of the computer when the stock market's open, we know the futures is open 23 and a half hours a day or whatever it is, 22 and a half hours a day, so you can enter these positions off hours.
Yes, exactly. Yeah, and for you guys who are in the U.S., the tax treatment is the best. That's why we love futures contracts.
So refresh atomic entry quick. Maybe we can cover that unless you got another topic on the things there.
Yeah, we can cover that maybe in the next trading room. And also, but we did a pretty extensive video on that in the volatility arbitrage masterclass, didn't we?
I believe so.
Yeah, that was pretty extensive.
Check those, Andre. If you don't see them, let us know.
But yeah, we can do a refresh on that in the next one.
Speaking of that, I was going to throw this out to the gang and the crew, and probably also shoot out in an email later, is send us your questions, guys. And we'll use these sessions to answer them, so you don't have to think of it live. If you think of something in the middle of the day, write it down, shoot me an email, support@Tradingology. We'll get a list going, and we'll answer questions on these calls as well. So that way you're not trying to think of something off, oh, hey, what should I ask them right now? I forgot what I wanted to do yesterday. Take a note, shoot us the questions. We'll bring them up here.
Exactly. All right, so the arbitrage volume is basically just like it's kind of so if you're not trained in the technical analysis, I really highly recommend the book I put into the actually the name of the book. That was a subtitle: How Price and Volume Move Markets. The name of the book is Timing the Trade.
I was going to say you only had the author in there. There you go.
Yeah. The How Price and Volume Move Markets is the subtitle. The actual name of the book is Timing the Trade. So here's the important thing to remember about volume, is that volume will typically build as price moves. So in this case, we've got a downtrend, and you can see that there is increasing volume as the market moves lower. That means that there's more participation in the sell side of the market, and until we reach something that looks like this, which is capitulation. So we had a pretty sizable down move here, pretty good movement, pretty good amount of volume into that. And then we had a really high, on the 4-hour chart, it's a 200 level, which is built into the script. That indicates that, hey, this move is probably over right here. So at least on a temporary basis. And so we get this large amount of volume. It means everybody's piled into the trade at this point. And the move is probably pretty much over. And so then we get a little bit of green here, a little bit more red, but you can see the red is very, very low on this downturn, a little bit of a move lower. And that's a pretty good indication when volume is pretty low like that, that it's not a sustainable move, because there's not a lot of people piling into that trade. And so what we get after that move is a move higher. And we get a little bit of capitulation, and we get a little bit of higher volume here, which indicates that it's probably going to continue to move, because there's people who are actually trading it, who are getting into that trade, and they have maybe they're taking initial positions, and they'll continue to see the move higher, but no one follows them. So we really had a decline in volume on an up move, which is a very, very good sign. Nobody's chasing it, and the move will continue to go lower after that. So that's a very basic way that you would use the arbitrage volume, which has really been, it was really tough to actually create a substitute of volume just based on price alone, instead of using actual volume figures. But it works amazingly well. So anyway, there we are. Isham says, Dave, just wondering if you can trade this on a 4-hour basis. That's exactly what I do. Yeah, I'm only using the 4-hour for the swing trades. That's right. With the micros. Thanks, James. I appreciate that. So this combination, we've got the ARB signals script, which is the upper study. We've got the crossover studies, which gives us a great, really a fantastic way to detect the binary trend signals, we go from positive. We talk about this constantly. We go from positive to negative, and now we can actually visualize that positive to negative trend on the screen while we're trading it. And so doesn't necessarily replace a spreadsheet, but it certainly enhances it by a great deal. In fact, you could use this to trade the volatility arbitrage spread alone. Now, you can use this on any of the instruments that we have. So I prefer the YMNQ. Like I said in the video, you've got industrials, arbitrage against the tech stocks, and the arbitrage on the ESRTY, which is the large cap stocks and the small cap stocks. So that's the arbitrage opportunity between those two. And those are the ones I like. Now you can do the NASDAQ and the S&P 500 if you want. It will work on any of the pairs in the trading futures contracts. In order to change that, all you have to do, the lower studies, the crossover is the one that you want to change. So if you want to use it for for any of the different pairs, all you have to do is go into the studies, go to edit studies, and then for the crossover, all you have to do is go into the gearbox and then change the instruments for the left symbol and the right symbol right here. That's all you got to do.
And that's the only one you change. You don't have to worry about the volume. You don't have to worry about the signals.
Nope. Signals are are not dependent upon the pair that you're using. So you can use them on any pair, as well as the R volume doesn't depend on the pair at all. Only the crossover does.
Andre wants to know if you're watching the market continuously after you're in a swing trade.
Not much, because these trends, just like on the spreadsheet, tend to persist for long periods of time. As we mentioned, one of the advantages of this trade, this strategy, is that the trends do persist pretty well. And so if I'm in a trade, from what I've done so far, is I've entered positions overnight based on the trend that I see in the dominance. So if in this case, YM is not as dominant as it used to be. And so it looks like NQ is starting to become more dominant as this declines. Then I will take, especially with the new micros, you can build positions. So as you see YM dominance starting to decline, you can start to take maybe one contract on the micros, and then go to 2 contracts, and then go to 3 contracts, and pretty much write it down. I tend to, let's see, for the time that I've tested it so far, I'm entering positions for the overnight session. And then I'm watching it in the morning, and that's about it. And I'll kind of ride it out through the day. I think, as long as we're getting the dominance line continuing to go lower and we don't have any capitulation in the volume, I'll continue to ride that as low as it goes. That's great. Use it for SLV DBC. I have not put it on SLV DBC, but I don't see any reason why it wouldn't work. Absolutely.
Yeah, I'm liking watching that ESRTY more and more with the calendar anomaly stuff and Dr. Z and all that. I'm really liking those too.
Oh yeah. So it was basically his ideas. Dr. Zambo's book really sparked my imagination when it came to this idea that there are certain periods of the month in which the calendar spread moves. Like he mentioned, like the end of the month was kind of an interesting time frame, because at the beginning of the month, it would reverse the spread from the last 3 days or 4 days of the month to the first 4 days of the month. And so I said, well, there is that constant kind of oscillation between, between the spreads, between the instruments over a period of time, and how can we measure that? And I looked at all the instruments and all the tools that we developed, and the binary trend was the one that stuck out to me as probably the one that would be of most use, when determining when we have the spread moving in large movements of the spread from a negative to a positive, back to a negative to a positive. And that's one of the advantages of this strategy, is that it does consistently move from a negative to a positive spread. And all that means is that in the negative spread, NQ is dominating YM. It's stronger than YM. It's a relative strength. It's basically relative strength. And NQ is relatively stronger than the YM. And when it's positive, YM is relatively stronger than the NQ. But the fascinating thing is that it's constantly moving from positive to negative and positive to negative and positive to negative. And that's what makes it so consistent and reliable.
Yeah, it never goes completely one way.
That's right.
That's the magic.
Exactly. If you're a great stock picker and back in 2000 and you picked up Amazon stock, for $5 when it hit its low, I bet there was people trying to short Amazon stock at $5. I guarantee. They thought it was probably going to go to zero.
Oh, for sure.
And if you're wrong, you're going to get killed. And if you're right, that thing kept going up and up and up. The beauty of this system is that you can actually tell when it's going to go up and when it's going to go down. And it does it on a regular basis. It's consistent and reliable.
Keith was curious about your time frames when you're entering those positions, and if you're looking at a specific time frame. I think you covered you're pretty much using the 4-hour charts, but do you go down in more specific, closer time frames when you enter and exit?
Yeah, this morning I went from I entered based on the 4-hour chart last night. I was short MYM and MMQ, and then this morning, just before the market opened, I went to a 10-minute. Based on the TSA alert this morning, after we still do the analysis on the spreadsheet. Once the TSA alert came out, it indicated an up open, and that's exactly what happened. We had a very sharp up open, and then the trade was down. And so I went down to a 10-minute time frame using the new scripts. And it gave me a clear indication it was going to go up, and I exited the trade before that happened. I'll switch time frames, especially when I'm entering or exiting a position.
Does that help, Keith? Does that cover what you were looking for?
But I'll be honest with you, last night when I entered the short position, I just looked at the 4-hour. But when I exited the position this morning, I definitely went down to a 10-minute time frame.
I've found myself doing similar things. Like when I entered those previous swings, I was only looking at literally the daily chart on our old that I still use. It's not like we're throwing away everything else.
Right.
I would enter the swing based on the bell curve on the daily chart. It's like, yep, we're extended. We're going down. We're going to enter, this way. And the same thing, exit maybe on a smaller time frame, but I've definitely entered on the large time frames.
Yeah, exactly. Andre, when do you think these scripts are going to be ready? Dan and I are going to discuss that, and we'll get back to you, but I think they're ready now.
We have to have a committee meeting.
Yes, we'll have a little high-level board.
Yeah. It's about that time for the board meeting anyways. It's June.
Yeah, that's true.
All right, gentlemen. Nice showing today. Sean wants to be on the exec team. We'll let you know when applications are opening.
We have a very, very tough vetting process, so I don't know. Make sure you have all your ducks in order. Any final question, guys? We'll wrap it up for today. But I am super excited. I just think that this is, as we mentioned before, it's probably these micro contracts are the best thing that's happened to retail traders in 20 years. Super excited. Super. And now with these new scripts, and I can't imagine anyone who doesn't make money with this. I'm typically not someone who would ever make any kind of guarantees or anything, because I have no idea how you're going to use these scripts, but it's almost really something that you can look at immediately and say, yep, that's where the trend's going, and that's the position I'm going to take. And you don't really have a lot of thought. And so when I started thinking about how I'm going to design these new scripts, I'm thinking, how can we take the subjective decision making out of the trade when we're looking at too many different things at one time? How can I put it on one screen and say, okay, I can clearly identify a trend with a high degree of confidence? And that's exactly how I designed this, and how, I mean, I can't say that I did it on my own. Dr. Ziemba, obviously, I owe a great deal of gratitude to, because I had no idea anyone else in the world thought like me or how volatility arbitrage actually works. And I had no idea he was doing it at a very high level, on an academic level, and he created this gigantic hedge fund that won all kinds of trading competitions and stuff like that. But it was just it was a breath of fresh air to see what he was doing. And in addition, Andrew and JD Hayes have done a tremendous amount of work on the scripts for the volatility arbitrage over the last couple of years. And I want to thank those guys and shout out to them that they have just really opened up the possibilities of what this spread can actually do for traders. And they put in a tremendous amount of work and effort to develop all of the scripts. And in these scripts, these new scripts are really taking bits and pieces from each one of their coding efforts. And so, like I said, I'm not a great coder, but I know what I want, and I can put the pieces together to get the results that I want. And I think these new scripts are really volatility arbitrage 2.0. This is like the next level of the volatility arbitrage strategy. And so I want to shout out to those guys and really thank them a lot for all the work that they've done. All right, guys, thank you very much for joining us today, and we will see you guys on Thursday, I guess.
Sounds good, crew. Mark, we'll get your question on the next one, unless you wanted to quickly answer what the blue dot was, Dave.
And guys, if you are not signed up for Volatility Arbitrage Masterclass, if you're not a private client, please sign up. You'll just get so many insights into how this strategy works. Dan is just a fantastic teacher, and he's very patient. He'll work with you guys, and he'll go through the entire process with you from start to finish. And you will not find anyone else on the planet who knows the strategy inside and out like Dan does. So if you're not signed up, sign up now.
I appreciate that, Dave. Thank you.
Yep. Have a great day, everybody. Talk to you again on Thursday.